Hey, real life traders from all over the world. It's Jeremy Alexander Newsom with, of course, Real Life Trading. Hope you're having a great Monday. And I trust you had an amazing last few days as well. Got a chance to spend some time with your family and your friends. Had some laughs, had some food, had some drinks, had some gifts and goodies and merriment to be had by all. I definitely got to enjoy all of those subjects and activities over the last few weeks down in Panama City with Ashley and her family. It was really and truly a very splendid experience, and got to see meet new friends, meet some new buddies, meet some new traders. Panama City was a great time, and I love it. Great place. Back up in Nashville today, it is raining and a little cold, but not too bad. I was thinking it'd actually be colder for Christmas, but nope, it was not. It was I don't know, high 70s in Florida, and it's, low 70s here in Nashville right now. So anyway, it's feeling pretty good. Let's check out the markets, and you may notice that there's only a few days and a few hours left in 2015, and the volume kind of dictates that as well. Not a lot going on last 2-3 days. Volume is really tapered off. Today, we almost have kind of a perfect little doji candle. The market is still open, so keep in mind everything's subject to change in volatility. But we had a white candle the other day, the 21st to the 22nd. White candle, gap up on the SPY. So remember, if it's a white candle and it gaps up, that is indeed a bullish retest gap. So really today and last few days, this is indeed a retest coming in, and it's looking good. I don't really think too much is going on with the SPY. We have a little bit of a pattern like this, some lower lows and some lower highs, and we're smack dab in the middle of that. So, buddy and another trader, Michael out there, has got himself into a 209.50, 214.50 bear call spread, which means as long as the SPY stays below that little green line, he'll make some money by that January expiration. I'm also considering maybe a condor, something like this. I'm going to look into that more probably tomorrow and maybe Wednesday, but just so that you guys know, that's kind of what I'm thinking, because realistically, this part of December and January is looking a lot like this part of December and January of last year, and we could still get another little rotation down into this little support, which I'd be a buyer at that point. Then the stock would trade back up again, and I'd be a seller. So something kind of like that in the future, what I'm kind of anticipating. So if you're saying, Jeremy, what do you think is going to happen for the first quarter of 2016? Probably same thing's been happening for the last quarter of 2015. Very choppy, very sideways, very sporadic, no real direction. Just find some individual trades and trade them as you see fit is really what I am going on with the market. I do want to throw this big, really interesting warning signal that I have out there in the markets right now. This is something that's really fascinating to me. So this is the IYT, which is the transportational index, meaning this is the index that tracks the transportational funds and averages. And notice the lower highs and the lower lows. So if I just show you guys, these trend lines are coming in here, right? High, lower 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 high. We keep getting lower highs. And we did make some lower lows here. We do have a relative low right there, so about the same place that happened in August. Now, here's the warning symbol that I'm keeping my eye on. It's really specifically this candle that occurred on 12/17/15 on the IYT. Huge volume came in, and it's a perfect, according to the TradingView data that I have, a perfect Marubozu candle. And those don't happen very often. In fact, I believe the last time this ETF got a perfect Marubozu candle, I remember the date, it was right here, 6/8. And notice, all right, Marubozu candle made a lower low, came back down, came back up, and then rolled over. So came down, came back up, came down, comes back up, and does this. Could that happen? Absolutely. And if it does, I think that's going to cause some interesting selling pressure in the market. Now, if we do close above the 12/17 candle, and we do it really in the next month, so in the next 30 days or so, then that's going to kind of negate my theory and kind of go with the fact that a lot of bears are going to be trapped, and we'll probably really start getting some type of rally in the market if that occurs. If that does not occur, though, and the high of that candle we do not close above really 140.14, I'm going to start slightly tiptoeing into the bearish camp potentially. Because really, if I hop over here to a weekly chart on the transportational index, you'll notice this trend line from way back here, 2009, has been holding up quite well. And that's where we're at right now. So we got a Marbosa. You can see some bearish volume did kind of pick up recently. And this could be and turns into a flag pattern, and we break that support. That's going to be a little bit bearish, and that would lead likely a divergence in the Dow Jones Industrials with the Dow Jones Transports, which could cause the market to drop a little bit. It's going to be interesting to see what happens. I'm not afraid of a bearish market. I'm just simply one of the few perma bulls out there that are saying the market's not bearish until it confirms bearish, which it has not yet and probably won't for a while. If it does, there are some signs out there that this could be bearish, but realistically, again, if we're looking at the weekly chart, last week's candle was kind of a bullish candle, right? It's a white candle that opened and closed below the prior black candle's close. Since that's the case, if we pop a little bit, that's going to be just slightly bullish. So either way, I'm still bullish. There's a warning sign or two out there. I'll be watching the general markets, but again, next few weeks to months, probably going to be like the last few weeks to months in the general market. Let's check out some relative stocks, some individual equities. Here's Apple. Still getting uncomfortably close to my mustard-covered apple, which I would have to consume, and that would be absolutely horrendous. Don't think that's going to happen. Again, my overall intention is I think that we're going to maybe form a double bottoming pattern on Apple down here. We've got a nice little buying candle coming in that came in on the 21st. We're getting a little bit of a lower shadow. This is a bearish candle pattern. Not going to deny that. It is an evening star reversal. Not at the most phenomenal of locations. Apple could still break 105 and it still could bounce. I'd still have to eat the apple, which is going to be horrible. But I got a 105, 100 bull put spread. So my thought is if we form this little double bottom and bounce, buy low, sell high on Apple. If we close below 105, I'm going to start looking for ways to unravel this bull put spread on Apple. Amazon, ticker symbol AMZN. Nice little gap today on Amazon, no doubt. Little black candle's been coming in the last few days. Decent little white candle. The open was 665.56 and the low was 665.50, which means it only had 6 cents of slippage from the open before it was a shaved bottom candle. This is a pretty relatively bullish gap. I do still think Amazon's going to kind of grind a little bit, something like this, where it's going to, after a nice little move up, it's going to rest and form this little triangle pattern. That's why I got it myself 590 put sale down there for January expiration. Long time to go, but probably going to buy that back next week after a few days of theta erode that particular option sale. Brian Bodie, Bhavani, and a few others in a 710, 715 bear call spread. And that expires the 8th of January, so not this Friday, but I believe next Friday on Amazon. So just kind of keep that in mind. I like the resistance. This is a little bit more of a bullish than bearish candle. No real premium down here for a bull put spread though, unless you go out pretty far. So just something to keep a close eye on. Netflix, ticker symbol NFLX. I had a few traders looking to buy the bounce off of this one, Mark and a few others. Here's your exponential moving averages. Again, you're going to hear this guy's name a lot, Brian Bodie, in a 110, 109 bull put spread that expires this Friday, if I'm not mistaken. And the 110 level, here's the long-term moving averages. 110 is below the 100 simple, which is at 111.84. So if I know Brian, and I'm pretty sure I do, his stop is at about 111 for this bull put spread. So just something you guys can consider. It does appear that it is retesting this triangle breakout. So notice this big blue triangle. Netflix broke out, trade to the all-time high, has pulled back, and we're getting some buying signals around the 100. Just something to keep an eye on. I'm bullish with the bounce off the 100 or the 200 on Netflix. At least more bullish than bearish overall. I do agree that it could continue to sell off as it did the last two times at this price point. We could continue down a little bit lower. But again, if we come into the 200, I think that'd be the stopping ground for Netflix, and that's probably where it would get bought up just a little bit. Here's Google, ticker symbol GOOGL. And again, I like today's candle. It is a new white soldier, at least thus far, right? Which is a white candle that opens and closes above the prior day black candle's close. So Amazon and Google showing some really nice gaps today, some nice bullish strength, maybe some ones to keep an eye on for, again, continuing to be and stay in their bullish trend. Brian's got himself a 725, 720 bull put spread expiring January 8th. and just going to wait on Google to see what it does overall. Facebook doing its thing. Not a lot of excitement going on Facebook. I do think this is a wave 4 on Facebook. So 1, 2, 3, 4, 5. Stan J's got himself a January 120 covered call. This put sale did expire worthless for anyone who got into that one. And a lot of traders are looking to do another put sale again on Facebook. So like a 199 sometime in January. I actually think that's okay. Earnings are coming up on the 27th of January. So long as you do a non-directional option trade before then, I think that's totally fine. Because again, I do think overall that Facebook's just in this sideways consolidation phase. The ending of my wave is coming up soon, so if my random drawing of that wave is going to work out, it should be popping relatively soon, or at least staying more bullish to neutral. I think Facebook, and I'm calling it, is a $150 stock or higher in 2016. I think it's going to take a slow process to get there, but I think it does move higher in the next year. Ladies and gentlemen, thanks so much for watching this real life stock review. As always, I really appreciate it. I'll have a few more videos for you this week. Definitely one on Monday, maybe another 1 or 2 bonus videos during this week, but make sure to register for the free week coming up January, the first week of January 4th through the 8th, I believe. 4th, 5th, 6th, 7th, and 8th. Yep, that's the first week of January. Free morning trading room, free afternoon trading room, free to the world. It's going to be incredible. Hope to see you guys there. Enjoy the rest of your week. I'll see you later, and until next time, remember, love life, live life, and trade. See ya.